I know what you're thinking when you see another video about tax changes. Here we go again. More confusion, more bad news for people like me. But hold on, because this time is different. The new tax law that just passed isn't just another political talking point. It's going to directly impact your paycheck, your retirement savings, and especially if you're a senior, it might actually put money back in your pocket. I'm Tony from Retirees Benefits, and I've spent the last 3 days reading through the 200-page tax reform report so you don't have to. I've broken it down into plain English because, let's be honest, most of us don't have tax lawyers on speed dial, and we shouldn't need them to understand how our own government is changing the rules. Today, I'm going to walk you through exactly what this means for your family, your taxes, and your future. And I promise you this, by the end of this video, you'll know more about these changes than 90% of the people talking about them online. So, what's the government actually trying to do here? According to the Treasury Department, this tax overhaul has 3 main goals: simplify the tax code, provide relief for middle and lower income families, and encourage long-term savings for retirement. Now, I've heard politicians promise to simplify taxes before, and it usually means the opposite. But this time, there are some real concrete changes that could actually help families who are struggling to get by. The big picture is this: they're expanding deductions for seniors, changing how retirement accounts work, and yes, there are some trade-offs. But unlike a lot of tax changes that mainly help wealthy people, this one is specifically designed to help people who are living paycheck to paycheck or trying to stretch a fixed income. Let me be crystal clear about who we're talking about here, because this matters to real people in real situations. Seniors over 65, you're getting the biggest wins here. If you're currently taking the standard deduction, you could see an additional $6,000 deduction starting this tax year. That's not $6,000 in your pocket. That's $6,000 less income that gets taxed. For most seniors, that translates to about $900 to $500 less in taxes owed. Working parents, especially single moms and dads. There are changes to child tax credits that could mean more money in your refund, veterans, and disabled individuals. New provisions specifically protect disability payments and VA benefits from certain tax implications. People saving for retirement. Whether you have a 401k at work, an IRA, or you're thinking about opening a Roth IRA, the rules are changing in ways that could help you save more. Unemployed individuals. If you're receiving unemployment benefits, there are some protections built in that weren't there before, the people who might see higher taxes. Honestly, it's mainly higher earners and people who have been using certain tax loopholes that are now being closed. All right, let's get into the details that actually matter to your wallet. The $6,000 senior deduction. This is huge. If you're 65 or older, you can now take an additional $6,000 standard deduction on top of the regular amount. The regular standard deduction for 2024 is $14, $600 for single filers and $29, $200 for married couples filing jointly. Add the senior bonus, and you're looking at $20. $600 for singles and $41, $200 for married couples where both spouses are over 65. Here's what that means in real money. If you're a single senior making $30,000 a year from Social Security and a small pension, instead of paying taxes on $400 of that income, you'd only pay taxes on $9,400. That's a tax savings of about $900 to $1,200, depending on your tax bracket. Roth IRA changes. The income limits for contributing to a Roth IRA are going up significantly. Previously, if you made more than $138,000 as a single person, you couldn't contribute to a Roth IRA at all. Now that limit is $153,000. For married couples, it's going from $218,000 to $240,000. Why does this matter if you're not making 6 figures? Because it means more people can use Roth IRAs, and that could affect employer retirement plans too. Some companies are adding Roth options to their 401k plans because of these changes. Traditional IRA required distributions. Here's a change that's going to affect a lot of people. The age when you have to start taking money out of your traditional IRA is moving from 72 to 75. That gives you 3 more years for your retirement money to grow tax-free. I know tax changes can feel overwhelming, but there's genuinely good news here for people who need it most. Protection for families in crisis. If you've had to withdraw money early from your 401k or IRA because of unemployment, medical bills, or family emergencies, the penalties are being reduced. Instead of a 10% penalty, it's dropping to 5% in many cases, and there are new hardship exceptions. Simplified filing. Remember those forms that were supposed to make taxes simpler, but actually made them more confusing? Several of those are being eliminated. The new 1040EZ is actually easy this time. State tax benefits. Many states automatically follow federal tax law, which means if your federal taxes go down because of the senior deduction, your state taxes probably will too. Child tax credit expansion. Families earning up to $85,000 can now claim the full $2,000 child tax credit per child. Previously, it started phasing out at $75,000. I promise to be honest with you, so here's what you need to know about the potential downsides. Some deductions are going away. The tax law eliminates or reduces some itemized deductions. If you currently itemize and deduct things like unreimbursed work expenses or certain miscellaneous deductions, you might lose those. Higher earners will pay more. If your household income is over $400,000, you're going to see tax increases. But let's be real. If you're watching a channel about low-income relief, this probably doesn't apply to you. Implementation timeline. Some of these changes don't take effect until next year, and others are being phased in over 3 years. The senior deduction starts immediately, but some of the retirement account changes won't fully kick in until 2026. Here's exactly what you need to do to make sure you don't miss out on these benefits. If you're over 65, make sure whoever prepares your taxes knows about the additional deduction. If you're doing your own taxes, look for the additional standard deduction for age line on your form. If you have retirement accounts, contact your 401k administrator or IRA custodian and ask about the new rules. Some companies are slow to update their systems, and you don't want to miss out on contribution opportunities. If you're planning to retire soon, the change in required distribution age means you might want to recalculate your retirement timeline. 3 extra years of tax-free growth could make a real difference for everyone. Keep better records. With tax laws changing, having good documentation of your income, expenses, and life changes is more important than ever. Let me address some specific situations I know many of you are dealing with. If you're caring for aging parents, there are new tax credits for family caregivers. If you're paying for your parents' medical care or housing, you might qualify for up to $1,500 in tax credits. If you're a veteran, VA disability payments continue to be tax-free, and there are new protections to make sure other benefits don't accidentally get taxed. If you're unemployed, unemployment benefits are still taxable, but there's now an option to have taxes withheld automatically, so you don't get hit with a big bill next year. If you're disabled and working, the earned income limits for certain programs have been adjusted to account for inflation, meaning you might be able to earn more without losing benefits. The truth is, tax law changes are never perfect, and they're never permanent. What we have now is better than what we had for most low and middle income families, especially seniors. But staying informed is going to be more important than ever. Congress will probably tinker with these rules over the next few years. Some provisions have sunset clauses, meaning they'll expire unless Congress renews them. The senior deduction is supposed to be permanent, but the retirement account changes are set to expire in 2028 unless they're renewed. Here's what I want you to remember from this video. The new tax law isn't perfect, but it's designed to help people who actually need help. The $6,000 senior deduction alone could save millions of older Americans hundreds or thousands of dollars in taxes. If you're struggling to make ends meet, these changes won't solve all your problems, but they might give you a little breathing room. And sometimes a little breathing room is exactly what you need to get back on your feet. The most important thing is to stay informed and make sure you're getting all the benefits you're entitled to. Too many people miss out on tax benefits simply because they don't know they exist. If this video helped you understand what's coming, please hit that subscribe button. I read these tax reports and policy documents so you don't have to, and I break them down in ways that actually matter to your life. Drop a comment and let me know your situation. Are you a senior who's excited about the extra deduction? Are you trying to figure out if you should switch to a Roth IRA? I read every comment, and your questions help me decide what to cover next. And check out my other videos on maximizing your tax refund and free resources for tax preparation. There's a whole playlist of practical money advice that can help you keep more of what you earn. Remember, knowledge is power, especially when it comes to your money. The more you understand about these changes, the better you can plan for your future. Thanks for watching, and I'll see you in the next.